Welcome back. You're watching Market Pulse. Let's get you some more budget analysis. Joining us now is Ashish Chauhan, MD and CEO at Bombay Stock Exchange. Thank you so much for joining us, Ashish. Let me begin by asking you, for domestic retail investors, there may not have been much in the budget, but how are you really rating this budget from a capital markets point of view?
See, the way we look at it is somewhere on the line, the budget has been sort of very interesting from the perspective of controlling the budget deficit. That was one of the largest points from the perspective of the markets. And somewhere I think even for the year 2012-13 and 13-14, there seems to be a good job done. We also look at it from the perspective of the FIIs and the QFIs, that is qualified foreign investors. They have been allowed to come in much, I think the framework of coming in has become much more easier, and that would actually help in the long run. Even for the retail investors, people would be able to come in much better because the distributor, even the mutual fund distributors and all, would be able to become members of the exchanges and participate in distributing mutual funds and so on and so forth. Overall, we think from the transaction perspective, it has been a very good budget. On top of that, the sort of STT has been brought down on futures from 17 rupees a lakh to around 10 rupees a lakh. So it's almost 40% down, and that is also a large reduction in the STD. And we think this will also help over a period in terms of bringing more investors into the stock markets.
Right. Let's talk about the debt markets now, something that UKSN and SEBI also have been focusing on, and now the finance minister has also said that he's looking at an active debt market segment on the exchanges. How is this really going to work out from a stock exchange point of view?
Yeah, the way we look at it is that over next 5 years, India will require to invest almost $1 trillion in the infrastructure sector, and that requires a lot of debt to be raised for the long term. And India requires to basically have investment in infrastructure by way of debt, because large amount of debt will have to be raised. And that's where this entire perspective of the sort of new debt market framework has come in. And the way I look at it is that the exchanges will have to also think innovatively in terms of getting people to sort of invest in the debt market, which is still happening even now. Last year also, as you said, almost 25,000 crores were collected by tax-free bond alone. And then there were other investments, but people don't trade those bonds because the debt trading has not developed so well in India. And if we are able to create a vibrant debt market like what we have done in equities, we would have done a yeoman's job.
Ashish, so then what's the next step forward?
Basically, the exchange will have to go back to the drawing board, create the rules, regulations, bylaws. SEBI will have to also, SEBI has already issued some guidelines in this regard, and then somewhere on the line, a lot of marketing, a lot of sort of sales and distribution needs to happen from exchange ends, even from the broker ends, to get people to not only invest in that market, but also start actively transacting on that. And that's what basically will mean that somewhere on the line, the exchanges will have to start competing like they compete on equity and equity derivatives.
Ashish, do you see the announcements on RGSS increasing the retail participation in the equity space?
In fact, one of our needs and demands was that RGSS scheme should be extended and should be made easy to invest in. I think that both the requirements have been met, that he has allowed this to be done over 3 years period, and also the limits has been increased from 10 to 12 lakhs. So we think over a period RGSS scheme should pick up, because the first year actually went in preparation for that. But I think next few years would see RGSS actually bringing a lot of more additional investors into the market.
Okay, Ashish, last question to you. How do you see the next few months in terms of the exchange turnover, the mood and the momentum from here on for the markets?
See, the way we look at it is the initial reaction could be kind of different, because once people start reading the fine prints, they may actually come back, because effectively whatever expectations were there in terms of the super rich tax or estate duty and so on and so forth, those actually made it much more palatable in a way. And in terms of the excise duty expectations which were supposed to go up, which has not gone up. So in a sense, once you start reading the fine prints, you might actually think that this has been a much better budget in terms of staying within the constraints of a smaller fiscal deficit, at the same time giving impetus to the investments, creating frameworks out of that, what I call limited opportunities that were available. And somewhere on the line, over a period, you may be able to see a lot of investors coming back.
All right, Mr. Chauhan, we'll leave it there. Thanks so much for joining us and getting us a perspective as to how you're reading into that budget that came out yesterday and what the outlook looks like going forward from here.